All right, so we're going to continue on here with chapter 13, preparing to trade in a simulator. Now, again, I hope that you're going to be trading in a simulator before you trade with real money. So whether this is preparing to trade, but I think it's really preparing to trade in a simulator. Of course, at this point in the classes, towards the end of the starter course, I would not think that you really have enough knowledge of my strategy to really be even practicing it in the simulator, because we've really been focusing more on these foundational topics, which are super important, but we're going to be getting into the strategy more during strategy development of the Warrior Pro classes. But right now you can start trading in a simulator just to start testing the water and start practicing. I mean, you know, just as quickly as that. Well, hold up. Oh, right, we changed that hotkey. So just as quickly as that and that, you could be getting in and potentially getting out with maybe a little bit of profit. So it's not a bad idea to start practicing. Okay, so chapter 13, part 1 is on understanding risk. So we're going to talk a little bit about the risks of being a trader, the profit trifecta and your profit loss ratios, minimizing losses at all costs, taking your first trade, when to trade with real money, how much to risk with a small account, and scaling your strategy. All right, now again, reminder, and I'm going to say it a million times, I'm going to sound like a broken record. Obviously, I say it because most beginner traders that I've met trade with real money. They have unnecessary losses, completely avoidable losses, and I don't want you looking at me saying, hey, you told me to start trading with real money while we were taking the classes. There are some people out there that do that. They say, blindly follow me while you're taking these classes. That way, at least you can make a little bit of money while you're learning. That's certainly a nice idea. I suppose that's nice marketing, but in reality, blindly following doesn't work. And maybe we'll talk a little bit more about that during this class. But I want to remind you that the market is going to be here. For me, when I started trading with real money, I justified trading with real money because I said, I have bills I need to pay. I can't afford to not trade with real money. I need to start making money like yesterday. Well, unfortunately, I then ended up losing money that I could have used to pay bills. I incurred unnecessary credit card debt in order to pay those bills on a credit card so I wouldn't have to take money out of my trading account. And the fact is, the market will be here for you. I know we all can get a little bit of FOMO, certainly on days when the market's really hot and everything else, but the market will be here for you. Prove you can trade in the simulator, and then dip your toes in the water slowly. I have met traders that trade in the simulator for, we had a student, this was years ago, but he was trading in the simulator for like 18 months, a year and a half. And for about, I don't know, 16 of those months, every single day he was posting unbelievable P&L. 7,000, 10,000, 15,000. I mean, he was making more in the simulator consistently every single day than I was making. And, you know, I would encourage him. I said, listen, why are you still trading in a simulator? You've got to start testing this with real money. And I don't remember. For whatever reason, I think he was trying to put together enough money to fund like a large account with like $50,000 or something because he wanted to, you know, jump in the water, you know, jump in the deep end and start trading with big size. And, you know, what ended up happening was he didn't transition well from sim trading to real money. And then because he had some big losses early on, he kind of dealt with this psychological struggle of the frustration and disappointment and confusion. And he never ended up really turning the corner. And so it's important to trade in the simulator, but it's also important at a certain point to start trading with real money because the simulator doesn't experience the emotions that you will no doubt experience that come with loss, the frustration, the FOMO, and everything else. And it doesn't perfectly simulate the slippage that you can experience when you trade with large size. So you could think, oh, I look at this stock, you know, RHE or whatever. RHE, okay, I'll go ahead and buy 10,000 shares here at 81. I guarantee you that I wouldn't be able to fill 10,000 shares at 81 right now. If there's not enough volume, I would definitely get slippage on it. So whatever, 5,000 shares. I would definitely get slippage on that order. So the fact that I'm in there at 81 and I could put an order here to sell it at 83, if it pops up, and that's going to look like a $100 winner, 2 cents on 5,000 shares. But in reality, that's not going to translate really well to real money. So yes, sim trading is important, but it's just like training wheels are important. You don't train for the Tour de France with training wheels on anymore. I don't care what you say, you don't do it. At that point, training wheels should be off. All right, so let's get into part one here, which is that trading is a career of discipline. I'm sorry to say, but it is. And I certainly struggle with this at times. You'll see me through your months and years, hopefully in the community, watching me trade, go through ups and downs where I'm very disciplined and following the rules, which is usually after having a series of unnecessary and big losses. And then I start having a really nice stretch, a really nice hot streak, and I can start getting a little sloppy and a little overly aggressive, but it pays off because the market's hot. And then the correction comes. I again go back into a kind of period of losses because I'm not following rules, I'm not respecting max loss and things like that. And so ultimately, long-term success in trading is about discipline. Now, we can choose the amount of risk we're willing to take on any trade. Every trade is an opportunity for profit with the potential for risk, right? I mean, this is just the way it is. And we measure these two components of a trade and consider them our profit versus our loss ratio. So our average winners versus our average losers. And I could tell you that I've had months where I've had a fantastic profit to loss ratio, and I've had months where I've had terrible profit to loss ratios for a variety of reasons. Now, in addition to the profit loss ratio, the profit loss ratio, if you shared with me right now, hey Ross, I have a profit loss ratio of 5-1, I would say that's great, but that doesn't tell me or guarantee by any means that you're a profitable trader. You could have a profit loss ratio of 5-1. Your winners are 500, your losers are only 100, but you're right only 1% of the time. So you're still losing money. So how do we kind of pull in that second metric? And that's our accuracy. So in addition to profit loss ratio, every trader has a percentage of success or his or her accuracy level. And this is your percentage of the time that you're right. So you've seen my accuracy being around 70%. You, as a beginner trader in the simulator or in any simulator, may likely be at 30 or 40%. And you may think this is crazy. I could flip a coin and be right more than I'm right here. But in fact, many traders, it's not that, it's not a logical, well, you might think, oh, it's 50-50 when you're getting started. I have a 50-50 chance of winning or losing. And on any trade, when you enter it, you do have a 50-50 chance, I suppose. But you can also lose 10 times in a row, which is discouraging, but it's certainly possible. So we look for traders to be consistent. And green, usually 4 out of 5 days a week. I figure I'll probably be red 4 days out of the month. That's not unusual for me, and that would still be a great month if I only have 4 red days. There are some months where I have more red days than that, but there are other months where I'm green most days and I only have 1 or 2 red days or even 0 red days. But we like to see consistency. So let's dial in a little bit more to this profit loss ratio. When you're trading in the simulator, one of the things that you'll notice is that, and this is in the Sterling simulator, you'll notice up here under Windows, you've got Warrior Metrics, you've got your aptitude, performance, and profit trifecta. Now, and we'll open up performance here. Now, what these do for us is these 3 windows are actually aggregating all of your trading activity. So while you're trading, and while I'm trading right here on RHE, I'll, I guess, take the loss on that and cancel the open order. And on OXBR, each one of these trades goes into our database, and we take all of those trades and we give you your metrics. So you actually know, while you're trading the simulator, what your profit to loss ratio is. And here it is. Profit loss ratio for me with a lot of practice trading is 0.94-1. My gross P&L is minus 3,500. My average winner is $354. My average loser is $377. So that creates the 0.94-1 ratio. I see my biggest gain. I see my biggest loser. I see my average hold time. I can see my success rate is 42% right here. This isn't great. And I can see my profitability by price, my profitability by time of day, my profitability by whether or not the stock was gapping up or down, my profitability by relative volume, my profitability by the instrument's total volume. So all of this helps you get feedback as to whether or not you're trading well, essentially. And ultimately, if your aptitudes do not support trading with real money, then you certainly shouldn't go live. On the profit trifecta right here, this is a little bit different. And this kind of takes the information of the aptitudes here and then just presents it in a more visual way that for some is easier to understand. And so that's what we're going to get into right here. So the profit loss ratio, first of all, this is a profit loss ratio table. And so what you can see here is if you have a 1-to-1 ratio, your break-even point is 50%, right? So if your average winners are $1 and your average losers are $1, and you take 10 trades and you have 5 winners and 5 losers, you're at break-even. Break-even right here is 50%. So if you trade with a profit loss ratio of 1-to-1, you need to be right at least 50% of the time to break even, and truly you'd want to aim for closer to 60 to 70% of the time. Now, if I pull up my metrics here, we will see in my trading that in fact my profit loss ratio right now is slightly negative. It's about probably 0.94 to 1. Unfortunately, this is the result of a few really big losses, and this happens. My accuracy, however, is 70%, and so that by far, is well above the 50% minimum, all the way up to a point where these metrics actually produce $6.6 million in profit. I would say that, just as sort of a brief tangent, that your profit loss ratio will no doubt be a reflection of your risk tolerance and your strategy and your personality. And I say that because for me, for instance, one of the reasons I started trading was because I didn't like how my investments were performing during 2008, 2007, 2008, the financial crisis. I thought that I could probably manage them better if I did it myself, which is sort of kind of silly in a way that I thought that, but that's what I thought. And so when I started trading, I was so afraid of risk and so afraid of losing money that as soon as I had a little bit of profit, I would sell the whole position. And so as a result, I would have a lot of trades, and a lot of my winners were really small because as soon as I was up, I would sell the whole thing. But then inevitably, when I would be in a loser, I would hold it and hope it would turn around. And so as I was getting started, I had a negative profit loss ratio of negative 2-to-1. So based on this right here, that meant my break even was actually, 67%. Average winner of $1, average loser of $2. And actually, for me, it was based on, I looked at it as cents per share. My average losers were about 23 cents, I think, and my average winners were only about 10 cents per share. Now, I'm sure that also translated to dollars in profit loss ratio, but in any case, and the better way to look at it is dollars. That's the more accurate way to look at it, but I didn't have this software at that time, so I was just using an Excel doc, and that's how I was doing it by cents per share. But I knew I was losing more on my losers than I was making on my winners, and my accuracy, I don't remember where it was at, but I wasn't making money, so it was below 67%. I was struggling. I would have 2 steps forward and then 2 steps back, so I was probably between 55 and 65%. One good week I'd be break even and a little profit, and then I'd have a bad week and I'd be, back to break even in my account. So other traders, and certainly traders out there that can afford to just buy something and walk away from the computer. Sometimes I've met so many traders through our classes. Sometimes small business owners will take a trade and then they go and make a couple phone calls. They come back, oh shoot, I'm down like $15,000. Well, I'll just hold it. They go back out to work. They come back later that day. They're up 45,000. So their average hold times are going to be significantly longer. When they do catch a winner, they're going to be much bigger because they're not selling half and selling half. But when they have losers, they're obviously big as well. So the metrics of a trader like that might be that they have much better profit loss ratios, but then their accuracy is lower. When they have profit, they're not always taking it. And, so anyways, accuracy dips. So where you want to be on this spectrum, in my opinion, is with a profit loss ratio of 1-to-1 at a minimum. So I'm kind of really at the bottom of what you want to be at. And you'd strive for closer to 2-to-1. The reason to strive for 2-to-1 is that because you could be right as little as 33% of the time and still make money. Unfortunately, the challenge is that to get your average winners to truly be double your average losers, you can't take the whole thing off the table really quickly. You've got to start holding for the bigger move. And sometimes when you hold for that bigger move, you have profit, and then it goes back to break even and it goes to red. And for every time that happens, it's a tick against your accuracy. And so what I have found to have an inverse relationship is profit to loss ratio going up and accuracy going down. There may be some traders out there that have been able to find a way to have high profit loss ratio and high accuracy, perhaps by just being really disciplined on their entries or whatever their secret is, I'm not sure. But it's something that I have generally found to have this inverse relationship. Now, personally, I prefer to focus on accuracy. I like to have high accuracy because when I have high accuracy, you know what comes with being right 75% of the time, 75% of the time? Confidence. You start to feel confident. You know, out of every 10 trades, you're probably going to have 7 or 8 winners. And so now you start to feel, and a dopamine, serotonin release probably as well. You're right. And so it's a feeling of confidence. It's a emotional feeling that comes with that. When you trade with confidence, you're of course going to usually start to feel comfortable trading with larger size and being more aggressive. Yep, and I can go to main screen there. So for me, accuracy is first. And the profit-loss ratio is kind of something that for me drags behind a little bit, but I'm okay with that being the case. So the 3 core components of profitability are consistency, accuracy, and profit-loss ratio. So we just added a new one in there, consistency. The question on consistency is, out of the last 6 weeks, how many of those weeks were you green? Now, I just used the last 6 weeks as kind of like a 6-week rolling average. I just sort of figured that was a good way of thinking about it. So for me right now, out of the last 6 weeks, I think right now I'm green 5 out of the 6. But it actually may only be 4 out of the 6. No, it's 4 out of the 6 because I was red the first 2 weeks of this month, which is not great, but it is what it is. So anyways, so that's consistency. Just if you have, it's whatever it is for you. So if you have 4 or 5 out of 6 weeks, you're doing pretty well. But if you're green only 1 out of 6 weeks, your consistency is very low. Of course, you don't get consistency without first getting accuracy and profit-loss ratio, but the consistency is kind of a good measuring stick because what we do here in the profit trifecta, each category of consistency, accuracy, and profit-loss ratio get up to 6 points. All right, so this is your scorecard. All right, so up to 6 points for each one. So if you have 6 weeks of profitability, you get 6 points, 1 point for each week. Now, if you lose money this week, you don't go back to 1, you'd go down to 5 because you're red 1 out of 6 weeks. All right, so you've got up to 6 points for consistency. You have up to 6 points for accuracy, moving from 50%, which is 1 point, 55, 60, 65, 70, and then 70 or up. And then you get up to 6 points for profit-loss ratio. Now, I will say, to be honest, this is spread out a little bit more. I didn't create like a curve on this to make it so I was a perfect score. As you can see, I'm not a perfect score. I'm only at 1-to-1. But again, this is sort of what we look at. So 1-to-1, 1.5-to-1, 1.75-to-1, 2-to-1, and 2-to-1 or up. If you can be 2-to-1 or higher, you're certainly doing really, really well. However, while what's interesting in this instance is that you could potentially have better metrics than me here and make less money. And that seems a little confusing, but the measure of how much you're going to make is not necessarily a direct tie to your scorecard here. Because while this sets your scorecard in terms of, is your strategy working and does it seem to be producing profit, right? Your profit-loss ratio and accuracy will tell us it's producing profit based on if your consistency is positive. So if it is, then if you're making less money than me, it's for one of 2 reasons. 1, you're trading with smaller share size, which is very likely, especially as a beginner. I've been doing this for 10 years and I'm trading at 50,000 shares. It took me 10 years to get to this level. So I'm almost certain trading with much smaller share size than me. And number 2, you may be trading a lot less than me. Last year, I took almost 7,000 trades. That's 28 trades a day. I took a lot of trades. You may only be trading once or twice a day, maybe 3 times a day, or maybe only a few times a week. So all of that is what will sort of factor into ultimately how much money you make from trading. So those are certainly some real variables there. So if we jump back into the simulator, you'll see here that this presents that information for you, showing you your last week. So as of last week, this is where you sat, or I sat here. So my consistency, I got 3 points for 2 weeks of consecutive profits, or 2 out of the last 6 weeks of profitability. My accuracy was between 51 and 55%. And my profit-loss ratio was actually good last week. So that's good. Now this gives you the historical look back of what your metrics were over the previous week 2, 3, 4, 5, and 6 weeks back. And then this tells you your current score. So my current score right here is an 11, which it seems like a little bit there's not enough trades in here for this to really be super useful. You've got to be trading a bit more actively. But if you can get yourself trading actively enough in the simulator where you trade every single day and you can pull up the calendar, which is up on the metrics and then performance, you can look at your calendar and you can see, okay, I'm consistently making money. I seem to know what I'm doing here. Then that's when it's time to start thinking about, okay, at what point do I flip the switch and put real money on the line, right? At a certain point, it's going to make sense to do it. So this is, there's the calendar there. So you can see your profitability by day of the week and then also by week, the week in total. All right, so let's see. Why don't we jump back out of the simulator and back to here. So we've talked about the risk of being a trader. We've talked a little bit about profit-loss ratios, which are very important. And now we're going to talk about step 3, minimizing our losses as a trader. There's a few ways that we can minimize our losses. And one of the ways is by calling your broker and actually setting a max loss on your account. So I have it with Lightspeed right now. And I think it's set at actually $20,000 on my account. But I called Rob and I said, hey, Rob, I want you to put a max loss on my account of $20,000. And if I'm down more than 20 grand, my account is locked and I cannot keep trading. That's it. I'm done for the day. Now, he's happy to do that because he wants to see me succeed. He doesn't want to see me have huge red days. I'm sure he knows how demoralizing those can be. And so I have a line in the sand. You similarly should put a line in the sand somewhere when you start trading with real money. In the simulator, I think it's okay, certainly in your first couple of months, to keep trading below your max loss just because you want to gain experience. And if you stop trading after one trade, then you're not gaining the experience you need. So for sim trading, it's okay to keep going. But for real money, you've got to set those max losses on your account. And when you're getting ready to transition from sim into real money, it also makes sense to start trading the sim a little bit more like it's real money. Number 2, when trading with small size, you can consider using stop orders. As I've said, they're not safer with larger size because of stop hunting. Market makers can see those large stop orders and can attempt to force the stock down to take out your stop. It's called stop hunting. So while it's true that I could take a position on, something like OXBR here of 10,000 shares or whatever at 80 and then set a stop on it at 75, I wouldn't want to do that with large share size. It's fine to do here with maybe 1,000 shares. It definitely controls and minimizes my downside risk, but with real money, I wouldn't do that with big size. And even with small size, if your stops are too close to the current market price, then you're going to have a problem, which is that it can dip down just for a second and then pop right back up and your order gets taken out. So you can't really effectively put a stop within like 2 cents of the current price because it's just such a high likelihood it'll dip, your stop will get taken out and then it pops right back up. And then probably the most difficult here is enforcing a max loss on yourself on each trade you take. And this is hard because ultimately you have to be disciplined enough to actually press the sell button, to follow those rules. And it's something that I have not always done well with, which is why occasionally I have really big losses. Whether I took too much size or I got kind of emotional on it and I got stubborn, I refused to let it go. For whatever reason, I got myself stuck and then, I ended up taking a really big loss. Ultimately, you are, in a large way, in control of how much you're willing to lose each day trading. You can't really control how much you're going to make. How much you make is the nature of the market and, what's happening in the market. But how much you're willing to lose is generally more within your control. There's certainly freak accidents that can happen where you could have a loss that's bigger than you were expecting, but generally we can control how much we're willing to risk on each trade. And that would be through a calculation of what my logical max loss is in terms of the proper stop on the chart. So for a bull flag on a 5-minute chart, for instance, like OXBR, on OXBR, the proper stop would have been down here at 418. So if the proper stop is 418 and I'm in at 480, that's a 70 cent, 60 cent stop. Maybe 1,000 shares is $600 of risk. All right, so I can understand I should probably, if I'm only willing to take $500 of risk, maybe on that trade I should only take 800 shares instead of 1,000, for instance. And then the first 5-minute candle to make a new high goes up. The only problem is if your stop is 60 cents away, your profit target would have to reasonably be closer to $1 to $1.20 to get that 2-to-1 ratio. So in this instance, I would not be inclined, if I got in at 80, to actually hold it all the way back down to 418. I would probably use what I would call more of an arbitrary stop, which is I'm in at 80 and I'm going to set a stop maybe at the $0.50 of 450, which is a 30-cent stop. And then from there, my profit target could be 30 cents times 2, that's 60 cents. That's much more achievable. We're going to talk about this in a lot more detail when we get into strategy development in terms of setting stops and profit targets, but just to give you that kind of little preview, when we take a trade, we have an ability to choose how much risk we're going to take. And there are certainly times where I will, in the sort of heat of the moment, miscalculate how much risk I'm actually taking. And that's where some of my biggest losses have come from, where I've underestimated how much a stock could drop. And all of a sudden I'm in and it's, whoa, it just dropped $2 a share. And so that is a risk factor, but we can also, even knowing that that's a risk factor, we can learn the type of stocks that are going to have a higher likelihood of experiencing those types of moves and ones that will be less likely. All right. Step 4, taking your first trade. It is not uncommon to feel a little nervous when you're taking your first trade, but I want you to remember that it doesn't have to be perfect. If you're right 50% of the time, you'll be profitable as long as you maintain a good profit-loss ratio. You do not have to be right 100% of the time. I had a student at one point who was a pharmacist, and he said, Ross, this is such a struggle for me because I have been in a career for my entire life where I could never be wrong. I can't be wrong. I always have to be right. It's so important that I'm right every single time. One mistake could be life and death, potentially. And so for him, he had to have that process of becoming comfortable with experiencing loss. And it was definitely a challenge for him. And that's true in a lot of careers. It's not just in the pharmacy, in pharmacy, but it's true. It's true in a lot of careers that decisions are very important and you really can't be wrong. And so with trading, it is, interesting that we could be wrong 30% of the time and still make money. And on the days when you caught all 30% in one day, you had your 3 losers in one day out of 10 trades, you feel like, wow, I feel like such a loser. I've lost here. I've taken a big loss. I had 3 losses in a row. I had 0% accuracy. This is terrible. And it can certainly feel demoralizing, disappointing. You've lost money. It can trigger emotional responses. And yet, that is part of being a trader, having those losses and sometimes having days where you simply close red. It's not realistic to close green every single day of the year. It's probably almost impossible. I've never done it. I don't know that it would even be important to try to do it. What would be the value of trying to be green every single day? I'll tell you that the first time I had a long hot streak was 56 consecutive days. And during that 56 consecutive day hot streak, I didn't actually make a lot of money because I became so obsessed with not being red. I just wanted to be green every single day. I was trying to set a record. I don't know why I got fixated on it. But as a result, I stopped taking risk. I was very conservative. As soon as I was up some days $100 or $200, I would just stop trading. The difference between being down $10 and being up $100 or even down 10 or up 10 was the difference between my hot streak ending or continuing. Even though being down isn't the end of a hot streak, it was the end of a consecutive day hot streak. And eventually when I took a loss, it was that first day was almost a relief because it let me off the hook of this very silly challenge that I had been embarking on. So it's not uncommon to be nervous when you take your first trade. And the best way to deal with this is to work through conditioning yourself to experience that little bit of discomfort in a relatively safe way. So, and this is what I call breaking the ice. So for me on Tesla right now, I could tell you that I would be very nervous if I bought 3,000 shares of this. That's like a $2 million trade. Would I be as nervous if I bought 300? No, probably not. Would I be as nervous if I bought 30? No. Would I be as nervous if I bought 3? I could buy 3 shares right now and not even blink. So now we're talking about this spectrum of emotional conditioning to be comfortable with loss. So we all have a place where the amount is like no big deal. Sometimes people will play, gamble like poker or whatever it is with, quarters or something like that. and then other people do $5 bills and other people do $100 bills. Everyone's got a different appetite for risk. But the question ultimately is, for whatever reason, you are where you are right now, and you've got to learn what that is. So some of you may feel comfortable taking larger size initially than others. I still would recommend going with small size. But for some of you, even as small as 100 shares might trigger that kind of stress response. And if that's the case, then you start smaller. You start with 10 shares and you slowly scale up from there. You don't have to start at 100. You don't have to start at 1,000. And you should not start at 5 or 10,000. It's unnecessary and is more likely going to result in unnecessary losses as you're acclimating to trading with real money. So I continually try to push my comfort zone and my comfort level. And in the last 6 months, I've traded with larger single share positions than I've ever traded in my entire career. That's been the nature of me trying to push my comfort zone, because that means I can continue to grow as a trader. And it's also been possible because of the incredible market that we've been witness to. Unfortunately, in a colder market, even if I want to be increasing share size, there's usually not enough volume. The relative volume is just generally lower because the market is cooler. It's just, there's not enough happening. And so, as a result, I really, as much as I might like to trade with large share size, I do have to size down. And when I size down in a cold market, then when the market heats back up, I kind of have to size back up, slowly as I kind of re-experience the emotional conditioning of, okay, I'm back to trading with 50,000 shares. Whoa, I'm down $25,000 real quick there. I've got to, kind of scale back up to that. So a question that many of you are probably asking yourselves is, when can I start trading with real money? So as a general rule of thumb, I want to see our students prove to me that they have, and really to yourself, that you have 1 month of profitability in the simulator. You've got to have one green month, and it can't be just with one lucky trade. It's got to be based on some consistent accuracy. 60% would be nice. I say 60% because, we'd like to see out of 100 trades or whatever that you've had enough trades that you can sort of you can put some weight into your metrics. If you only have I don't know, 10 trades, that's not really enough. That's not enough data to really base a lot on. So if it takes you 3 months of trading in a simulator before you have a green month, then so be it. If it takes you 6 months, so be it. There are some that will have a green month on their first month, and maybe it's beginner's luck. They switch to trading with real money and they have to go back to the sim, and that's okay if that happens. I do not expect any of you will be ready to trade with real money until you finish the Warrior Pro classes, have learned the strategies that I use every single day, the ins and outs of them, and at the end of the pro course that you've done your pre-trading checklist of everything that you should have accomplished before putting real money into the market. Traders who jump the gun and go in with real money too soon, well, you have one of two things that will happen. You'll have beginner's luck, which is going to give you a false sense of confidence, and then you'll lose it all, or you'll just lose it all. So either way, you're going to lose it all. It's just a question of, do you want the up before the down, or do you want to just go down? Because you're going to lose it all. I'm saying that. I'm sure that there's someone that's going to be able to say that wasn't the experience for me, but I would rather err on the side of caution and say that 100% failure rate if you trade with real money before you're ready, rather than give you the hope that maybe you'll be the one that makes it, because it's just not likely. So given the fact that you are all probably content to be trading a simulator for a longer period of time, those of you who are certainly watching this class as part of the Warrior Starter course, maybe you'll be trading a simulator for 2 or 3 months before you start trading with real money. When you transition to real money, you will almost always want to start with 100 shares at the most. Yes, you will lose money that first couple weeks of trading with 100 shares, but what I'll ask you to do is export all of your trades and then import them. So when you go to import your trades here, you can, if you use TraderView, and this is like $49 a month. I mean, I could have my development team build out this whole thing, but this is not that expensive. I think, and you can actually use it for free. But in any case, so depending on which broker you use, you've got E-Trade, you've got Lightspeed, you've got TD Ameritrade, Robinhood. I mean, you've got so many different brokers here. TradeStation, Charles Schwab, and you've got whatever. So you can import your trades here, and then you can go over to your reports, and you can start looking at your metrics. Now, you want to look at your metrics in gross profit, because what you want to see is with 100 shares, what's my profit loss ratio look like? What's my accuracy look like before commissions? Yes, we understand commissions with 100 shares are going to take the profit. Use 100 shares, but pretend it's 10,000. Trade it just like it's 10,000 shares, which means you get in, you sell half when you're up 5 cents because that's $500. You sell another half when you're up 10 cents because that's another $500, and you keep scaling out. So if you can do that for a couple weeks and you have metrics that support you increasing your share size, then you go up to 200 shares. If your metrics don't support increasing share size, then you don't increase yet. If they, for whatever reason, require you to go back to the simulator, you can go back to the simulator. When people start a real money account with only $500, the problem is that you have only $150 of losses before your account gets shut down and you have to add more money to it. So while I've proven it's possible to day trade with a $500 account, it's much better to start with a little more than that, $1,000, $1,500, $2,500, just to give you a little cushion. But you don't want to start with a huge account because then you could also afford to make some really huge mistakes, and you don't want to do that. So how much do I risk on a small account? Well, this is relative. This is not, I can't answer this question for you, but based on my experience, if I have a $500 account, $5,000, $25,000, I will manage risk differently ultimately when I've scaled up my strategy and I'm very comfortable trading. But as a beginner trader, regardless of your account size, the answer is always the same, which is that you should trade with small size, 100 to 500 shares in your first few weeks, your first month of trading. The first month of live trading, I'll repeat this, it's not about making money. That's kind of strange. But what it's about is proving you can maintain similar metrics that you had while trading in the simulator and that you can build some confidence. If you can trade well in that first month, if you can follow the same strategies, if you can have the similar levels of accuracy and profit-loss ratio, the profits will follow. You can't chase profits. You have to chase, well, chasing isn't the best word, but you can't focus on profits. You have to focus on quality of trade, and then the profits will always follow that. When you start turning that around and focusing on making a certain amount of money, you're looking at the wrong side of the equation. So when you're trading a simulator, as I already kind of alluded to, you have to be realistic about how you trade it. And if you're trading a simulator with 10,000 shares and you're thinking, okay, I'm going to go live, I'm going to start making $15,000 a day, which means I can quit my job that's currently paying me $250,000 a year because I'm going to be making $2 million a year, you're getting a little ahead of yourself. I would not encourage anyone to do that. It's important to practice with smaller size in the sim because when you go live, you'll be trading with smaller size. Yeah, it's fun to take a sim trade and, on some expensive stock, buy a crazy huge position, and you'll see someone in the sim show that they're up like $970,000. But all right, so you've done that once or twice. Now it's time to take it a little more seriously. So I generally never want to lose more than 5 to 10% of my account in one day. And that is a large amount of the account. With a $500 account, though, that's only $50. With a $100,000 account, that's $10,000. And I would be comfortable losing 10 grand on a $100,000 account. I'd be comfortable losing 40 or 50 grand on a $400,000 or $500,000 account. I know that that's a lot to lose in one day, but I also know that I can make that amount or more in one day. So I take higher levels of risk. I would say that as a beginner trader, it is better to try to stop sooner when you're having a red day, just because of the fact that once you dig yourself that hole, then it's a psychological battle of digging yourself out of it that can be very challenging. That can be a big struggle. And so to try to avoid putting yourself in a situation where you're having to go through that psychological battle, it sometimes is better to stop much, much sooner. If you're down, $20, just say, that's it, I'm done, I'll come back tomorrow. Realistically, most of my best days started with a green trade. So if I start with a red trade, then already it's like, all right, that's not great. If I have a second red trade, 2 red trades in a row to start the day, that's not a great day. Now, if you're in the simulator, okay, keep practicing. The market's still open. But with real money, it's a good idea to kind of pull the plug on the day as early as possible. Because if you took if you had a $40,000 account and you lost $4,000 in one day, for instance, and you're averaging typically only 500 a day, that just wouldn't be acceptable. So you never want to, ultimately, you don't want to lose more in one day than you can make in one day. And fortunately, I haven't yet. I hope I don't, but it could happen. But I've got my biggest green day is over 200,000. So, and maybe by the time some of you are watching this, I have an even bigger green day than that. But if your biggest green day right now is only $150 or $300, you don't want to be taking a $900 red day. it may happen, but you've got to really look carefully at why it happened and what you can do to prevent it from happening again. Because it's just so much psychologically easier to recover when you're like, oh, well, I lost, but it's only one day. I gave back one good day. Okay, I gave back 2 good days. Okay, I gave back 28 good days. Now it's starting to get a little more upsetting because you're like, it's going to take me, when I was down $150,000, when I had drawn my account down 150 grand, even though I had grown it to, over $5 million in the last 12 months by that point, I was like, $150,000, it's going to take me 30 $5,000 days in a row to get this back. I mean, that starts to feel like, wow, I can't see the light at the end of that tunnel. That's a long hike. Maybe 15, $10,000 days, 7 or 8, $20,000 days. But then I'm starting to swing for bigger trades. I'm getting emotional, and that's not a good place to be in. Then I'm chasing and trading my profit, focusing on the profit and not on the trades. And then number 7 is, what's the scalability of your strategy? I have found, surprisingly, that I could scale my strategy to over $1 million a year. I did not expect it, because in my entire career, I had never had a year where I broke $1 million. My best year was, I think, around 500,000. And then in 2020, I made 5 million. So I didn't expect that to happen at all. But it turned out that when we experienced a absolutely epic, incredible market, that because we had so much more volume, that I was able to scale not just from 100 shares to 1,000, not just from 1,000 to 5,000, and then a 5,000 to 10,000. I was able to scale from 10,000 shares to 20,000, to 30,000, to 40,000, to 50,000. My biggest position last year was 100,000 shares in one trade. 100,000 shares in one trade. Every dollar it goes up, I make 100 grand. Every penny it goes up, I make $1,000. It goes up 25 cents, I'm up 25 grand. So, I was only able to do that a couple of times to that size, and that was on stocks that had hundreds of millions of shares of volume. But when you have stocks that are trading on 2, 3, 4, 500 million shares of volume, and they're on crazy relative volume, and they're up, and they've got this catalyst, clearly that's presenting an opportunity. And so, while I don't think it's realistic for the majority of even moderately successful traders to probably ever scale up to a $5 million a year, we have students in the 100K club who have done really well and who have had a period of consistent profitability and did not make as much as I made last year. So I think it does take a certain combination of, risk tolerance and everything else that I just had at the right place at the right time. But it does speak to the fact that you certainly shouldn't have any issue scaling a strategy from 100 shares to 5,000. So when you're looking at your metrics and asking myself, okay, so let's just say, for instance, I'm just going to tag this here. I'm going to do 12/1/2019, 12/31/2019. So in this month right here, where I did this small account challenge, on day 1, I traded with I made $158. So let's just actually look at the first 11 days, or up to the 11th of December. So up to the 11th of December, I'd had, that many green days in a row, and I made $1,200. Okay, so $1,200 over the course of 7 days or whatever. I'm only making $200 a day. But let's look at the metrics. The profit-loss ratio, average winners are 150, average losers are 45. That's a fantastic profit-loss ratio. My accuracy is 75%. That's great too. Okay, now my average daily volume is 3,200 shares. And so here's the question. And I took a total of 12 trades. So I'm taking 2 trades a day. So again, we'd say, well, how many trading days was this? And well, let's just go back. I think it was 6 days. All right, so 6 days and 12. So 2 trades a day. So that means 3,200 divided by 2 is 1,600 shares. So that means, remember, this is round trip. So buying 1,600 and selling 1,600. So for each trade, I was buying 800 shares and then selling 800 shares. And I took 2 trades a day, which is 1,600 shares for each one. So that's 3,200 shares. So if I can make an average of $200 a day with 800 shares, what happens then if I go to 1,600 shares? Do I start making 400 a day? What happens if I go to 3,200 shares? Do I make 800 a day? What happens if I go to 6,400 shares? Do I make 1,600 a day? Maybe not. There is going to be a place with every strategy where you have diminishing returns. So just to show you here, so we'll certainly have exponential as we increase from 100 to 200 to 400 to 800 to 1,600 to 3,200 to 6,400, and then to 12,000, maybe we start to plateau. Maybe as a beginner trader, you'd actually start to come down at 12,000 because that would be just too much stress and you wouldn't be able to manage it well. For me right now, I would probably say, in this market today, I would probably say, this is maybe around like 75,000 shares for me right now. And if I tried to really go up on a daily basis to 85, 90, 100,000 shares, I don't think that would actually give me continued profit right now. Maybe it would, but I'm not sure. But in any case, we all have that kind of curve where we will see increasing, and then it'll start to plateau, and then it'll start to roll over and decrease. Now, you won't know what that is ultimately without actually practicing, but this is the purpose of trading with small size during those first few weeks. Okay, so, and Daniel says, Ross, what should the daily profit targets be with this small size? Well, remember, we said at the beginning, can you make 10 cents a day? Can you make 10 cents a share a day? So realistically, with 100 shares, can you make 10 bucks a day? I know it doesn't sound like a lot of money, but it is a lot of money when you're doing it with 1,000 shares and it's $100 a day. $100 a day is $26,000 a year. Now that's, again, maybe that's not enough money to change your life, but if you were able to do that for a year, and during that year, guaranteed you gained a tremendous amount of experience, that experience turns into skill, right? Then maybe by the end of that year, if you were doing well, you'd be able to start increasing up to 150 a day or 200 a day, 300 a day. So Richard says 300 a day would keep the mortgage away. Yeah, 300 a day is $75,000 a year. So no doubt, I would certainly hope so. So yeah, that's what I would kind of say, 10 cents a day. To be honest though, I feel setting the bar kind of low when we have stocks that are really making big moves, like what you were what we were seeing on ACY and RHE on some of those ones, or what we saw today on OXBR and on COS. Those ones we certainly probably, today and several days, I think I've been actually recently pulling almost a full $1 a share out of the market. My biggest position today on OXBR in this account, I think, was 20,000 shares. So 20,000 shares times 10 cents would be 2,000 bucks. So I certainly got more than 2,000, more than 10 cents. On this trade on COS, I certainly got a lot more than 10 cents. But getting to the place where you have the confidence to hold for that bigger move, you're not going to have that confidence without a fair amount of experience. So early on, you may be in the habit of kind of just getting those quick base hits. So, and one thing that I'll actually share with you here that you could do as a hotkey, if you wanted to, you could actually set a hotkey in here. Let's go to View and then to Settings. Let's go to Hotkeys. And why don't we set a profit target? Why not, right? So let's set a profit target hotkey. It'll be a sell. We could just do half of the position. I mean, you could do the full position, but let's just do half position. Sell half position, the current symbol. Price is going to be my position average price. So that's your average price that you're currently in at. And let's go ahead and add 10 cents. Just like that. And we're going to load and go. So it's going to load the order and send the order. So let's go ahead and make that Control P for profit target. Okay, so we're going to say okay on that. And now let's try to take a trade on, something. Now, so like GameStop, this would be a really tough one to do that on because look, while it's true that I could probably do it, the downside risk on this stock would be far more than 10 cents. So we always have to remember that if we're actually going to be taking profit off the table up only 10 cents, that we need to be risking realistically only 5 to 10 cents. But let's just, for the sake of testing it, I'll go Shift 1 and I'll go Control P. So I have a profit target out right now to sell half of the order at, we've got to go back into here, go to View, Settings, Columns, and we're going to add Price. Okay, so my order's at 75, right, 10 cents above the current price. Well, that makes sense. So here we go. And there my order's out. Now back in, Control P. Added back, Control P. So it took out my order again, took out part of it. There we go. Back in, Control P. Back in for the break of 108, Control P. So now, this is risky because I'm obviously in this at a pretty high price. I'm in it at 107.98. And if I make money on this, I'm only making 10 cents, whereas I'm risking probably over $1 a share. So this is not the stock that you would want to do that on. In this case, you would either adjust your profit target for, you would move that hotkey higher, or you would just not even trade the stock at all. So I could put the rest of the order here at 844. So yeah, but again, that's something that you could consider practicing. An issue there potentially would be liquidity in the simulator. It might make it seem like you could easily get picked up a 5,000 share sell order when with real money that might not be as easy. 10 cents with 1,000 shares is easy maybe to fill, but with 10,000 would not be as easy. And in terms of putting out a live stop order at the same time as a profit target order, that's going to be a problem because if you do that, then you have two sell orders. Two sell orders means that one of them could fill, and then if the other one's still open, you could go short. And so like my broker won't let me put out two sell orders at the same time in my retirement account because I'm not allowed to short in my retirement account. So on those trades on GME, I was up $784, but now I'm holding this one down over 1,000. So again, the profit loss ratio on this stock would not be good just because of this higher level of volatility. But that's just the way it is with this one. So and maybe you don't. Again, I don't use the order to sell like a profit target order to sell 10 cents above the current price. And the reason I don't do it, just so you know, is because I don't want to cap my winners. I don't want to cap my winner. If I get in it at whatever price and then it rips up 40 cents and I took the whole thing off the table at 10 cents, I'm going to feel like, man, well, if I do that, my average winners are only 10 cents. So if you're going to cap your winners, then you also feel like you should cap your losers, but you can't usually do that with two orders at the same time. So, but again, in terms of just kind of getting into the habit of being consistent, selling half of it up 10 cents, well, that's not really capping your winner completely. That's just selling half of it. So you take half off the table and maybe set then your stop at break even on the rest. And what that will ensure is that trade will at the very least be a small winner, right? So anyways, and I always look at gains in terms of cents per share because they're easy to calculate. I don't go based on 5% risk, 5% profit. If I did that, it's going to vary so much with some of the lower price stocks. And I just find that it's easier for me to do the math on number of shares times cents per share. So that's the way I have done it. Okay, so with that, let's jump into Chapter 13, Part 2, which is reviewing your trade. So we're going to continue really on what we're already discussing here. All right, so we're going to continue here with Chapter 13, Part 2, which we've already kind of dug into a little bit, which is on preparing to trade in the simulator and reviewing your trades. So one of the most important things that I did when I got started was I was tracking my trades. And I am... I'm grateful that I was doing that. I would say that, so it's kind of funny. So Uncle Steve, my mom gave me this red, like ledger. It's like a ledger, with, like a spreadsheet. And she was like, here, you can use this for tracking your trades. And I open it, page one is like, is mom's grocery bills and stuff from like 1968. And it's like, one loaf of bread, 7 cents, 15 gallons of gas, 25 cents. And it's like, it's a really old ledger that she was using, I guess with Dad to kind of track, or I think she was using it by herself to track her bills, and then, but then she had resumed it at different points. So anyway, I picked up where she left off there, which was, bought one share, ExxonMobil, $25 a share or whatever it was. And, her joy and love of using a spreadsheet, I guess, and balancing her checkbook rubbed off on me. So I picked that up, and that's when I sort of started trading. So that was when I first got started in high school. when I came back in my 20s, by that time computers were invented, and I was using an actual Excel doc. And so I was, using Excel, and I was tracking every trade that I took. So now we're at a point where I don't actually have to do this kind of manual entry, and we have software like TraderView and even what we have in the simulator with your metrics to start to aggregate your data for you. Although there is still some value in using an Excel doc. So one of the things that's nice about the Excel doc is that you can easily enter your trade as you take it. It can kind of become a little bit of a meditative review process. I'm going to review my trade, then I'm going to, think about what was right and wrong about it, take some notes on it. And with TraderView, unfortunately, you can only import your trades the next day. Now, the reason this is kind of a problem is because, by the time you're importing your trades from the next day, if you ended up taking 25, 30, or 50 trades, you're not going to remember each one. So, I could click on this and be like, LMPX, I couldn't even tell you, I don't even remember this trade. It's like, well, obviously this is a long time ago, but still, you can add notes. So I could say, this was a terrific trade. I really had a perfect entry, great exit. Okay, well, you could do that, but then the only way you're going to see that note is if you actually open up the trade. What you can also do is you can add tags. And so you could add a tag like bull flag trade, and you could add that tag. Or you could add, I have circuit breaker halt, which means I held it during a circuit breaker halt. And, by adding some of those tags, then you can go in and you can search for circuit breaker halts here and filter. Ooh, I haven't seen that happen before. Let's see. And then, again, then I can start to sort a little bit more based on the strategy that I'm trading. So while you can do all that with TradingView or TraderView, I was doing that in an Excel doc, and I don't actually have Excel on this laptop. But one of the things you can do with an Excel doc is, you can see here how I had these columns: gap and go, surging momentum, first flag, second flag, third flag, because we know the first and second pullbacks are usually better. I learned that from this data. It was a breaking news trade. It was a top reversal, a bottom reversal. It had bad risk. If I would admit, that was a high risk trade, I would put the number 1 there. So I just put the number 1 in each column that was true. Time of entry, either down to the minute or AM, PM, whatever. The source where I found the stock might have been, CNBC. Maybe it was my scanner, but wherever it was. And then what I could do is you can go under data, and you can sort your column. You can sort your sheet by a column. So I would say, okay, I'm going to sort this whole sheet by column D. And then I would select all of those trades and look at my total profits and losses just based on that sub strategy. And then I would do it again on, first flag. I would do it on news. And I kept doing that. And so for me, I've talked about my turning point being a point where I had had a really big loss. And so I was not able to trade. My account was locked out because I'd blown up my account. And so I just began this kind of meditative practice of reviewing my trades. One of the things that has always made me feel better when I'm in kind of a bad place is making a game plan. If I'm down $150,000 in 2 weeks, okay, doesn't feel good. Well, let's make a game plan. Because once I have a game plan, I start to feel better. So if we ever get lost in the desert together, I'm going to say, let's make a game plan. Because then, you feel motivated by that game plan. So anyways, as I began to go through this data, I sorted by the different columns, and I actually discovered that if I only traded these certain subsets of everything I was trading, that there were certain parts of my trading that were very consistently profitable. So all I needed to do was only trade those. Now, the question of, can you export trades from the sim into Excel? I think that the answer is no. And I think that even if you could, the way it's going to break them up, it's going to be, it's going to be messy because, these trades where, you get in and then you sell half and then you add back and then you sell half, that might end up getting 5 different Excel lines because each one is its own trade. So what I generally did when I used a actual Excel was I just did averages, so I would say, okay, I bought this stock based on, this setup, and it was, my entry, first bull flag, first candle to make a new high, my entry was whatever, my average exit was this, and I would know that because I knew if I had made, this amount of money, whatever it was, that therefore I had obviously made, with 1,000 shares, X number of cents. But again, you guys don't have to use Excel. You're totally fine to use Trader View if you want to import your trades there. I actually do think that you can export your trades to import to Trader View. Gosh, where do we do it? You might have to log into the support room to ask on that, but you do have your metrics right here. But if you wanted to use this instead or Trader View instead, you certainly could do that. But in any case, I think knowing your metrics is important because when you struggle, which inevitably you will at some point. Oh, thanks, Edwin. Okay, so let's see. So we're going to go to View, and we're going to go to Export. Why do I don't see Export on mine. View. It's under the Action tab. Actions. I wonder if I have a different, from the trading menu, bottom left. Oh, from right here. Okay. So these are all of our trades for the day. So actions, view, and no, I actually export right there. Okay, so export all. All right, so I'd export all of them to my desktop or whatever, I guess. So let's just try that for a second. Let's see, export today's trades. You export to a text file? Well, let's see what that text file looks like. Maybe you just copy and paste it then. So this looks like a copy paste. But yeah, so I mean, you could do that. Or perhaps you could do that to import your trades into Trader View over here under import. So on the left side of this page, go to the position manager or the trading monitor in the simulator and include these and only these columns in exactly this order. All right, well, let's do it. Let's just do it together. Let's see what happens. Okay, so go to the positions manager, which is right here, or the trading monitor. So let's see. This is the trading monitor. Date, time, symbol, shares, price, side. All right, so we got to go in here to our settings, and we'll change this to, this is all orders right here. So we're going to go date, time, symbol, side. Let's see. Date, time, symbol, share side, share size. Okay, I'll grab that one. So we've got date, time, symbol, side, and then where's shares? Oh, let's see. All right, well, I would think that it would be here. Huh, but I don't see it. You know what? I think quantity might be shares. Quantity. All right, so we're going to go with quantity. All right, now we're going to reorganize them because they said they want to see date, time, symbol, share, and then side. Oops, sorry. Oh, and we got to add price. All right, so we'll go to columns and we'll go to price right there. Click on that. Okay. And just like that. Okay, so now why don't I just save this? I'll save the layout. Okay. So now I can go to export to the data file. So I could go to export right here, all, and we'll do today's trades, take 2. And then export here, save anywhere you want. Remember where you put it. All right. I remembered where I put it. It's right here. And then so it does appear to look like that. Wait. Just the S. Huh. Well, let's see what happens. And then we'll choose the file and we'll import it. So, and our date format is month, day, year for me. Month, date, year. I'll just do a test. That way I can go in and delete them. All right, so let's see. I think invalid price found. So we'll have to go back and see what the problem was there, but maybe this isn't the best time for me to go through this. So in any case, we'll see if we can get this dialed in, and I'll ask if our support team can maybe put together some quick documentation, or maybe they already have, and they can you can quickly go through if you want to. Again, this is just oh, maybe it's execution price, because that's the price of the order. So average execution price, I'm not sure if that's going to really fix it either, though. But in any case, well, okay, all right, we'll try one more time. All right, so export all. We're going to do take 3. All right. Now we'll open take 3, which is right here, and we'll go like this, and we'll say test, add, upload. Let's see if this one accepts it. Execution quantity and average price. Let's see. Yeah, because we've got quantity there. I'm not sure if that even, it didn't feel like that worked. Yeah, I don't think that did anything. I guess we could just try to import the file. Okay, so it is importing. So it imported all 28 trades. All right, so now we go to review, and then here are my trades right here. This is not related to me. That's something else. Okay, so and then this shows us in a little bit more detail what we did. What happened today. So you just have to be in the process of doing that each day. But if you do that at the end of each day, then you can go take notes. Now, again, the nice thing about the aptitudes is that you do have the big picture right here, and I do think that this is really helpful. But it is also helpful to get a little bit more granular, and you've got this software right here, which is, it's just not expensive. So it just probably is more cost effective for you guys to use this than for me to try to build out everything here. But again, we'll see. So let's save this again. Well, let me just rearrange this for a second. So I'm gonna close this, move that over there. I'll just close that for now. Okay. And then we'll just save the layout. So that's an option if you would like to use it, or if you don't want to use it, that's okay. As you're first getting started, it may not be as necessary, but when you're getting ready to start really treating it like real money, that may be when it's time to kind of step it up a little bit more. Okay, so again, just to recap here, I do think it's really important that you track your trades in some way. It allows you to better understand your metrics. If you don't know what your metrics are, you're kind of flying blind. So, and it's the same as running a business. You need to know what your metrics are. If you're running, it doesn't matter what kind of business you're running. You want to know what your overhead is. You want to know what your cost of goods sold are. It's the same with trading. You want to understand your metrics, because by understanding it, by really knowing it well, it gives you, it just gives you that better sense of what you need to work on to be better. Because we all want to try to be better, ultimately, right? Okay, so with that, we can continue on here to chapter 14. Chapter 14 will actually be live with myself, Ted, and Diane, and it's a trader psychology session. So I really hope you guys enjoy it, and then you'll be back with me right here in my office for chapter 15.